eMoneyMind.com, bringing you another Monday market analysis. Today is March 28th, 2016. Hope you enjoyed your 3-day weekend. On Friday, I posted some thoughts about the current channel that we're in, and I wanted to touch on that as well as highlight one of today's trades for Monday. But first, I want to mention that I'm going to be bringing back the live trading sessions excuse me, on a weekly basis. So for all current eMoney Mind VIP members, you will get access to the weekly sessions. I'm looking to hold them on Tuesday morning at the open, starting of the following Tuesday, so a week from tomorrow, the first Tuesday in April. And we'll go through the markets at the open, go through some trade setups. You'll see my screen just like it is here, and we'll talk about the markets. We'll answer. I'll try my best to answer questions as we go. It's been a couple years since I've held the regular live trading room, and I discontinued it and kind of moved away from that in the past just because it becomes rather distracting for my own trading to be answering questions and managing the room and everything else. But I think if we start back up on a once a week basis, I've had a lot of requests for some more of the live trading videos and the live trading room. So I think what I would like to do is start up on a weekly basis, and that being Tuesday morning, kind of kicking off the week. And then I may end up moving this video to perhaps Thursday evening and have that be kind of a trade recap video, and I'll kind of go through the week thus far and talk about some of the different trade setups and things that have occurred. So if you think that's going to be helpful, feel free to share your thoughts with me. You can always shoot me an email, tim@eMoneyMind.com. And like I said, for existing VIP members, you're going to get access to this right in the VIP dashboard, so you don't have to do anything else. There's no extra cost or anything like that. And if you're not a VIP member and you want to get access to the live trading sessions as well as the all of the content that's in the members area, the archive webinars and how-to videos and live trades and my Excel spreadsheets and all that kind of stuff, feel free to sign up and check it out. So without further ado, let's talk a little bit about the markets here on a daily chart, and then move down to the ES and talk about a trade example from today. So I drew up this channel, and you can see a really nice consolidation formation that has occurred as we've moved up this channel. And what I mean by consolidation, we've got a move up and then a consolidation that kind of takes us sideways to the lower end of the channel, and then a move to the upper end, and then some consolidation just kind of moving sideways to the lower end of the channel. And that's a really healthy market. It doesn't mean that we can't move outside of the channel, because we certainly will, and I think especially as we come up into this resistance area, it's very likely that we'll break out of this channel. But in the meantime, this creates some nice structure. It creates some nice swing lows and swing highs. It creates support levels and resistance levels for when we do break out or break down, and it gives us a clear action point. So for today, getting long above the high of the low bar in the pullback is a great opportunity, because just like when we're looking at a smaller time frame, that is a signal that the momentum has shifted or is about to shift or is shifting, at least on a short-term basis. So and you can kind of just do that the whole way up. If you're looking, let's say starting with this very large body candle, getting long above the high, and this is the lowest bar in this very small pullback, leads or has led to a move higher. Same thing here, getting long above the low bar, the high of the lowest bar in this, it's only 2-bar pullback, but it's a pullback to the lower channel, and then just, even just very simply trailing your stop underneath. So this big body candle here would be the entry candle, and you'd be looking at this high as your entry, and letting the market fill you, placing your stop just below, either if you're using the SPY to do this, you can place your stop farther out below the low of that candle. If you're using futures and holding overnight, then you're probably using a tighter stop. But essentially, you're just looking to trail daily bars, trail the lows until we break. And so you're capturing the move from, at least in this move here, 57s up to, we'll call it 83s. So we're just looking to capture the meat of the move, and that same concept both on the daily chart or the smaller time frames, same concept works. So again, potential here to see the markets kind of drift higher up until the upper end of the range, so maybe around the 2060 level. Certainly doesn't mean that we can't break out and fake out and roll over, but if we're looking at a longer perspective, more often than not, when we break the high of the low bar, it leads to a trend that pushes us higher, and you can get this kind of day after day where we break new highs, and then we can trail our stop. And like I said, whether you're on a daily chart, a 15-minute chart, it's just a great little strategy. And the same works for the reverse. If we were in a downtrend, we'd be looking to short below the low of the highest bar in the rally if we were shorting. So just some things to think about within this range. Getting long at the bottom of the range, getting short at the top of the range. The same concepts apply whether it's a channel that's uptrending or sideways channel or a downward channel. So what I want to do now is talk about a trade from today, and I had a good question from an individual who emailed me that said, we were just discussing, if you're entering on the 512 tick chart and the target on the 512 tick chart is only 8 ticks away, what can you do to kind of get in on the smaller time frame but then get out on the larger time frame? So actually first I want to go to a 15-minute chart and just show you what that looks like so we have some context. So this morning on the 15-minute chart, we can draw up a trading hours only high to low, and that was a nice trade from the kind of initial bounce this morning down to lows of the day. And so when we're entering, if we look at a tick chart, sometimes the tick chart gives us kind of a extruded view of the 15-minute, if you will. So this was the high point that I pulled, this was the low point, and then this was the entry area. Now because I'm on the 512, you're seeing a lot more candles in between, but in essence, this is a 15-minute setup, but we're looking at it on the 512 tick chart. So for an entry, simply taking the 50% level, and if it's an odd number like this, you can round down, or even round down and add a tick just to make sure that you get filled. So we'll call it 2850s. And then for a stop, using the 6-tick stop, if you're using that method of kind of rounding down and adding a tick, so we're at 2850s, then your 6-tick stop, or your 1.5 stop, is at 2030s. And so that puts our stop just above the high here, just outside of the 61.8, and then also outside of the bounce that did occur, or the break, if you will, or the just kind of little tails wicks that we got in here. So getting filled over here, it's important not to tighten your stop immediately. If you get into a trade and it starts to go your way 2 ticks, you don't want to bring your stop to break even. You want to leave it at -6, because this is a very common occurrence on the ES, where we kind of move sideways. Maybe we trade in this case, trading in 5 ticks. Coming 1 tick away from your stop, you think, oh, I'm going to get stopped out. But, a lot of times you don't. Sometimes you come in 3-4 ticks, or in this case 5 ticks, and that's okay. But what's not okay is to tighten your stop just arbitrarily. You want to give it room to run, or give it room to digest, if you will, because at the onset of the trade is when it's going to be the slowest, typically, or the most chopping around. Once we break down, then, once we're away from our entry, then it's just kind of sitting back and trying to hang in the trade as long as we can. So once we do get this break, and, using this little swing low that was put in here, once we break that swing low, then you can start to take your stop and begin to trail it either above each of the candles as the new candle forms, or because this setup is visible on a 15-minute chart, you can just put your target down here at, so same concept, we'll round up, and you could add a tick if you want, so 75s and then evens. So we're going from 2850s entry to 24s, and that's a pretty nice, move with a 6-tick stop getting in on the 512 tick chart. So that's a great example of a trade from today. And then that took us really into the lunchtime session. We can draw up the next move in the series, but by that point, after that 10 o'clock Central Time, I get a little bit cautious, just because usually we go into lunch and kind of just move sideways and don't do a whole lot. But you can see even going in the afternoon, we've got quite a few good setups that are occurring. So it doesn't take a whole lot. It doesn't take 15 trades or even 10 trades, or even in this case, just one trade, one good trade in the morning is all you need if you're patient and you just kind of let the market unfold. There's going to be days where there's trade after trade after trade, even in a 2-hour window, but it's important to kind of let the market come to you and not just jump in and start taking a bunch of trades, because by the time you get to a nice trade like this, if you've got a handful of scratch trades or losing trades or whatever, boredom trades, now you're in the hole. And when you get a nice trade set up, you may miss it, or you may just be kind of gaining back what you already gave up. So that's one way to use the 512 tick chart, but then also take advantage of the larger 15-minute target. And the same thing, you can do the same thing by entering on a 512 tick chart. If you're entering the first setup after the 15-minute, so get in on the 512 tick chart, but then use the 15-minute -23 as your target, and you can also trail on the way up too. So you're kind of if you took your hands and you had your hand at the target and your hand at the other hand down below at the stop, and you were kind of bringing your bottom hand up to the top, you're kind of containing your risk, if you will, and locking in the profits as you go. So that's kind of how I look at the markets, and we'll do a lot more analysis and talking about the markets live in real time next week, starting on Tuesday, when we will be doing the bringing back the live trading room. And again, you can find all the information for that over at eminymine.com/VIP, and that will be part of the members area of the eMiniMind VIP area. So thanks a lot. If you have questions, shoot me an email, tim@eminymine.com. I'd be happy to talk to you. And with that, we'll talk to you next week.